investors, welcome back to the channel. I am Mitali Dhoke, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. Thinking of investing in mutual funds but unsure which ones have truly stood the test of time? In this video, we uncover the top 5 mutual funds that have delivered the highest returns over the past 10 years, despite market volatilities and corrections. From small cap powerhouses to consistent mid cap players, these funds have outperformed and built serious wealth for investors. So, if you're aiming for long term growth and smart investment choices, stay tuned. This one's packed with valuable insight. The Indian stock market is currently going through a phase of volatility, with the Nifty 50 and BSE Sensex hovering below their record highs. After a significant rally in 2023 and early 2024, mid-cap and small caps corrected sharply. This was due to profit booking, liquidity issues, and high PE multiples, leading investors back to large caps. This slump also reflected growing investor caution towards the mid and small cap segment. Yet, structural growth for mid and small caps continues to stay intact. These agile domestic stocks trail the market in turbulent times only to bounce back quickly when stability returns. Mid-cap and small-cap mutual funds have beaten their large-cap counterparts over a complete market cycle, even though they are more volatile. To mitigate volatility, a structured SIP-based investment in quality mutual funds is necessary. This will smoothen out the volatility and capture long-term growth for investors. Let's have a look at the mutual funds that have delivered the highest return in the past 10 years. First is the Nippon India Small Cap Fund. Nippon India Small Cap Fund, launched in September 2010, has been a top performer in its segment over the long term. Being a small cap fund, it is aiming to find businesses that are frequently undercovered, early stage in their growth cycle, and possibly undervalued. This provides a high upside but also more volatility, particularly in market downturns. It might not be ideal for conservative investors or those with short-term objectives. The fund currently holds a corpus of Rs 580.28 billion on a rolling 10-year returns. The fund has delivered a CAGR of 23.52%. The fund's top stocks exposure includes HDFC Bank Limited at 2.2%, Multi Commodity Exchange of India Limited at 2%, and Dixon Technologies India Limited at 1.30%. The sector allocation is dominated by capital goods at 11.9%, healthcare at 8.2%, and chemicals at 7.7%. What differentiates this fund is its resilience in recovering strongly after correction. It fared well after the COVID phase into 2020 and 2021, and in 2023 when small caps picked up again. Second is the SBI Small Cap Fund. It is among the consistent performers in India's small cap mutual fund league. Having entered the market in September 2009, it has gained a reputation for providing strong long-term performances through a concentrated, quality-based portfolio strategy. Managed by R. Srinivasan and Mohan Lal, the fund seeks to spot budding companies with strong fundamentals and scalable business models. The fund currently holds a corpus of Rs 317.90 billion. On a rolling 10-year returns, the fund has delivered a CAGR of 22.61%. The fund's top stock exposure includes SBFC Finance Limited at 2.9%, Domes Industries Limited at 2.8%, and Krishna Institute of Medical Sciences Limited at 2.5%. Sector-wise, the fund's portfolio is dominated by finance at 8%, capital goods at 7.5%, and chemicals at 7.4%. SBI Small Cap Fund balances aggressive growth potential with a conservative small cap approach. Third is the Motilal Oswal Mid Cap Fund. Launched in February 2014, it is an equity mutual fund dedicated to mid-cap companies. The mid-cap investing strategy is useful for generating outperformance in bull markets, though it can also generate higher volatility during corrections. The fund currently holds a corpus of 277.80 billion. On a rolling 10 years return, the fund has delivered a CAGR of 21.17%. The fund's top stock exposure includes Persistent Systems Limited at 10.5%, Coforge Limited at 9.7%, and Kalyan Jewellers India Limited at 8.1%. The portfolio is dominated by sectors like IT at 25.6%, diamond and jewelry at 8.1%, and electricals at 7.9%. The scheme follows Motilal Oswal's QGLP framework, which is quality, growth, longevity, and price, with a focus on fundamentally robust companies with stable earnings growth and scalable business models. Fourth is the HSBC Small Cap Fund. Following the takeover of L&T Mutual Fund by HSBC Asset Management in 2022, the fund was renamed from L&T Emerging Businesses Fund to HSBC Small Cap Fund. Its underlying investment portfolio remained intact along with fund management expertise. Launched in May 2014, the fund currently holds a corpus of Rs 147.37 billion, and on a rolling 10 years return, the fund has delivered a CAGR of 21.16%. The fund's top stocks exposure includes KPR Mill Limited at 2.38%, Neoland Laboratories at 2.13%, and Aditya Birla Real Estate Limited at 2.8%. The portfolio is dominated by sectors like finance 11.4%, healthcare 8%, and capital goods at 7.6%. While not being as old or as big as some of its peers, HSBC Small Cap Fund has fast made a name for itself. It has performed better than its benchmark Nifty Small Cap 250 index on a longer term basis, reflecting experienced management and good portfolio building. Fifth is the Axis Small Cap Fund, one of India's top small cap equity mutual fund, is managed by Tejas Sheth, an experienced portfolio manager who is reputed to follow a bottom-up, quality-oriented investment strategy. The scheme has consistently produced strong long-term returns while upholding a quality-first approach. It has been extremely resilient during times of market volatility because it tends to favor companies with robust cash flows, low leverage, and durable competitive advantages. The fund currently holds a corpus of 233.18 billion, and on a rolling 10-year returns, the fund has delivered a CAGR of 20.74%. The fund's top stock exposure includes Krishna Institute of Medical Sciences Limited 3%, Cholamandalam Financial Holdings Limited at 3%, and Blue Star Limited at 2.8%. The portfolio is dominated by sectors like healthcare at 11.3%, finance at 10.9%, and IT at 6.5%. The fund steers clear of speculative names, which has served to manage downside risk more effectively than some of its aggressive small cap rivals. It's a solid choice for investors who are seeking exposure to India's growth story without pursuing the hype. Now, to conclude, as we progress through 2025, while intermittent volatility and macro struggles continue, the investment universe is still full of long-term possibilities. Pursuing past winners is not typically successful in mutual fund investing. Markets change and your strategy should too. Rather than investing based on past performance, you should narrow down on fund quality, manager consistency, and the alignment with your goals. A consistent, well-researched long-term plan is a more reliable way to create wealth. The key is not timing the best fund, but to remain invested with patience and discipline. So if you found this video helpful, do not forget to hit that like button and share it with fellow investors. For more expert insights on mutual fund investments, be sure to check out our related videos and articles linked below. And if you are new to the channel, hit subscribe and tap on the bell icon so you never miss an update on smart investing strategies. Signing off for now, happy investing. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Registration granted by SEBI, membership of BASL and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.